What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown, and today we are discussing a couple things that have happened to Bitcoin recently. Number one, Tesla has sold a seemingly significant portion of their Bitcoin, prompting allegations of pump and dump and Elon Musk being a criminal. And number two, the SEC has delayed their decision on whether or not to approve a pure Bitcoin ETF. So today we're going to look into what do these two things mean for the future of Bitcoin. Ready? Let's dive in. If you follow Bitcoin at all, you know that it has been making its way onto corporate balance sheets. That fight has been led by Michael Saylor, CEO of MicroStrategies, and he was the one who was instrumental in getting Elon Musk to put some of Tesla's cash into Bitcoin. Tesla has currently about $2.5 billion worth of Bitcoin based on the current value of right around 60,000. And if you follow Tesla and Elon Musk at all, you know that he doesn't really play by the books when it comes to regulators. He's consistently getting himself in trouble from things that he tweets, from things that he says, from claims that he makes with products that his company is going to release or at some point in the future will have. And many people do not appreciate the way that he runs his company and are accusing him now of pumping and dumping Bitcoin, criminally manipulating the price in order to get a profit. However, when you look at the amount of Bitcoin that Tesla sold, they sold about 10% and they made about $100 million of profit on the sales. When questioned about this, Elon Musk said that they did it to basically stress test Bitcoin. When you have such a large amount in an asset, you need to be able to prove to shareholders and your board that it's a liquid asset, especially if you're using it to replace cash. And so they spent a couple of weeks or a couple of months unloading a couple $100 million worth of Bitcoin. And guess what? It actually worked. Yes, Bitcoin has been volatile over that period, but if it was an illiquid security that couldn't take large institutional selling, the whale selling would have cratered the price of Bitcoin. It would have ruined the value of the rest of the Bitcoin on their balance sheet. Now, it's important to remember here that Tesla wasn't actually taking that big of a risk by selling some of their Bitcoin. It was kind of a win-win scenario for them. If they sell it and it doesn't crater the price, then they come away with making $100 million. That was a significant portion of their profits for this quarter. It was over a fourth of their total profits for the quarter, which is enormous. And so you have to wonder if maybe this sale of Bitcoin wasn't just to stress test Bitcoin. Maybe some of it was to say, hey, we need to bolster our earnings a little bit because we're not selling enough cars. But if it had cratered the price of Bitcoin, the way that this accounting works means that if the price of Bitcoin drops below their cost, they get to write that off as a loss, even without selling it. But if the price goes up above what they bought it for, they don't have to report that as a gain, as income, as earnings, unless they actually sell it. So it's kind of a win-win scenario for them, because if they ended up cratering the price of Bitcoin, it would have offset the gains from a tax perspective, and then they wouldn't have had to worry about the taxes on $100 million of profits. And they wouldn't have even had to realize that loss. They could have just held on to the Bitcoin until it eventually someday comes back. So from an accounting and a tax perspective, they weren't actually taking a huge risk with selling a substantial portion of their Bitcoin. However, the stress tests seemed to work. They unloaded a big portion of their Bitcoin, and Bitcoin held up. The institutional selling didn't drive the price down. Yes, it's been volatile, but it essentially worked. Now, in my mind, this is extremely bullish for Bitcoin, because if you can have a corporation with a huge balance sheet put $2.5 billion into Bitcoin, and then as needed, they can sell $100 million here, sell $100 million there, and it doesn't significantly impact the value of the remaining holdings of Bitcoin, that is extremely attractive, as other corporations, other CFOs, other institutions are looking at that and saying, they just proved you can use Bitcoin as a cash asset on your balance sheet. So personally, I'm taking that as a win. Now, number two, the SEC recently delayed its decision on whether or not to approve a pure Bitcoin ETF or not. And they delayed this decision until June. Now, under normal circumstances, because of a 45-day window, the SEC would have normally had to make a decision by May 3rd, but they're giving it an extra month in order to extend the deadline here. The stated reason is because they said they just needed more time to look at the details for something as new as a pure Bitcoin ETF. Now, just to be clear here, this is not a trust. A trust is governed by different regulations than an ETF, and it locks out a lot of investors' money, something like GBTC. There are many investment advisors and portfolio managers investors who cannot put their clients' money in GBTC, specifically because it doesn't have as many consumer and investor protections as something like an ETF, where they're governed. ETFs and trusts are governed under different rules and laws. And so an ETF would allow a lot more capital to have access to invest into Bitcoin that doesn't have access to invest in it right now. Second, there are other ETFs that have some exposure to the price of Bitcoin, but what is trying to get approved right now is a pure Bitcoin ETF, where all the money that goes into the ETF just goes directly to buy Bitcoin. It's important to note that the investors in the ETF will not actually own Bitcoin themselves. It'll be similar to GLD, how you are exposed to the price movement because the ETF itself will own the underlying asset, in this case Bitcoin, in GLD's case gold, but there wouldn't be an investor claim on Bitcoin should something happen to the fund. Now, to me, I view this as bullish for Bitcoin as well, simply because the longer it takes for something like a Bitcoin ETF in the United States to get approved, the longer it takes for that flood of money to have access to Bitcoin. There's a massive amount of money right now that can't access Bitcoin even if it wanted to. So this will open the doors, open the floodgates for a lot of invested money to have access to put 1%, 2%, 3% of a portfolio into Bitcoin through an ETF. So it allows you to front run that situation just a tad bit longer. Now, as bonus, two other things that I know a lot of people are worried about right now with Bitcoin is the recent price action and tax consequences. When you have an asset that goes up 5x in the course of 6 or 7 months, like Bitcoin did, it went from 10,000 to 50,000 within just about 6 months. It takes a lot of energy for that to happen. It takes a huge amount of net inflows in order to push the price up of an asset 5x in 6 months. That means that a lot of money that was going to buy, bought. And so naturally, when you have big and fast movements like this, you end up having a somewhat long period of consolidation. That's just normal asset price movement. If you look at the stock price of Amazon, for instance, that's basically all it does for the last 10 years. It has a big spike and then it consolidates for a while, then has a big spike and then it consolidates for a while, has a big spike and then it consolidates for a while. It's just normal bullish movement. So personally, I'm not concerned about the price action specifically from the standpoint of, does this mean the rally is over? I'm looking at that volatility as an opportunity, and that's why I like to buy daily, and I use Swan Bitcoin to do so. It makes it really easy to just have an automatic recurring transaction that buys it every single day. That way, if it drops to 50 or 45 grand on one day and then pops back up 10 grand the next day, you don't miss out on that since you're only buying it weekly or if you're only buying it monthly. And if you'd like to try them out, I've got them linked in the description below. You get $10 of free Bitcoin if you use my link. And I know the other thing that people are worried about right now with Bitcoin is regulations and banning it. What I consider most likely is an increase in taxes on cryptocurrency in order to try and reduce speculation and reduce the amount of money going into cryptocurrency, especially as the dollar weakens and inflation goes up and people look for a way out of fiat currency. I expect taxes to probably go up on cryptocurrency. Maybe not all the way to 80% like Janet Yellen mentioned, but I wouldn't be surprised if we see some sort of specific cryptocurrency tax. And that's why personally, I like to have at least some of my Bitcoin holdings in an IRA that's shielded from any taxes. If it's a traditional IRA, it's tax deferred. If it's a Roth IRA, it's going to be tax free. And so I love holding some of my Bitcoin in a IRA, in a self-directed IRA like iTrustCapital. Again, I've got them linked in the description below. And if you use my link, you will get your first month free. So overall, I know there's many other things happening to cryptocurrency right now, especially all around the world, but nothing that's happening right now is making me say it's time to sell, making me say that I want to reduce my holdings right now. I'm still hodling, I'm still stacking, and I'm excited for what comes next. If you liked the video, hit that like and subscribe button. I really appreciate you guys. Thanks for watching. Have a good day.